In this case, they owed us, they had bought the stuff for cash.
Okay, I see.
But in both cases, we would still debit sales returns and allowances.
Okay. Oh, it depends, either we use it cash or we use it return accounts receivables.
That's right.
Okay, I see your point.
But we still reverse entries A and B exactly, except that instead of debiting revenue, we do debit revenue in the sense we debit a contra account to revenue, called sales returns and allowances, which has the same effect of debiting revenue. Okay, so post up to your T account. Post up to sales returns and allowances, 90. Okay. And then post up to cash, 90. She does it. And then she's gonna post up to, and this is good for the people at home, because that's right, your teachers aren't gonna do this in California or Alabama or Florida, are they? Only on NJ campus. So you know what's going on. Then I'm not gonna tell you stories about the days in the Big Four. I'm gonna tell you how to do your problem, how to get at it, how to get an A. The only other way is to go to one of those private schools, I said. You won't know anything, but at least you'll have a piece of paper, which doesn't hurt, but it's also helpful to have some kind of knowledge of the study, of the degree you claim to have. Okay, then she posts to inventory. Did you post to inventory?
Yes,
And she posts to, she posts everything up?
yeah,
All right, cool.
30.
We got one more entry, right?
Yes.
Go ahead. Almost out of here. We're going to do one more little, we're going to just do a start of an income statement, very small. Net sales minus cost of goods sold equals gross profit. Go ahead.
Sold merchandise on account, 3,700, turns and 30.
Okay. So it's a redundant entry. You'll know how to do this. Go ahead, do it. So it's again, this is that entry A and B again.
Yes.
So now it starts to become redundant.
Okay, that's sold merchandise on account. 37.
So this is where we got to do entry A and B. So that way it looks like we even have. So it's okay to put you on YouTube? He's okay with that? You can show your girl at school. And he's a handsome young guy, so
Yeah.
he might get it. Maybe he'll get it. He just has like a screen, like a, screen test. Okay. So now she'll do the. She's gonna do the. She's doing the entry A and B, and then we're almost out of here. Sales. She's got it now. Again, look at it. It may take you. See, so that's good that she makes the mistake here. You see, she made a mistake, Angie.
So it's
Sales revenue and account receivable in the first two. Remember, siempre means always, so we always keep the other two that keep together are cost of goods sold and inventory. They stay together, which makes sense because the expenses cost of goods sold. The asset getting used is inventory. So that's part B, Angie. Does that make sense to you?
I thought it was accounts receivable and inventory.
No. Look at entry 2.
Entry 2.
See entry 2? What comes first?
Second. Entry 2 here, accounts receivable and then sales revenue.
That's right. You see, they come first. What's second is cost of goods sold and inventory, which makes sense because in the perpetual system, what they're referring to is that they perpetually keep track of cost of goods sold and inventory. So it makes sense that those two would stay together. And then cost of goods sold is how much?
2,800.
New stuff in there.
We did a lot of work today, and these would balance. If we made a trial balance, see, it wouldn't make any sense to not put them in T accounts, would it?
No, absolutely not.
Would you agree, Magali?
Yes.
Even though we're not going to make a trial balance right now, unless you really say, Mike, I really want to make one, to see if it balances. It should balance. I think everything is posted correctly, but to understand, okay? All right, now the very last thing we're gonna do is this. Did she post them? Maybe make sure you post them or else it won't balance. And a couple of times there's so much stuff that Mike could have missed one, like we did on that one. But it probably will balance. The very last thing we're going to do is we're going to make the beginning of an income statement, because in chapter 5 you start to learn how to make an income statement. Let's see. Let's see if she did post everything. Account receivable. Did she get account receivable? Yes, she did. Did she get sales? No, she didn't. She didn't post the sales. That's why I go from top to bottom. So now post up to revenue. You see, you didn't post up to revenue. You see that? Did she get all the revenues in there? The 5,500 she has.
Sales is a revenue.
Your sales is a revenue. That's no. Erase that service up there. That's sales revenue. All right. So then, okay, she did post up. She got the 5,500.
In this case, we're not providing services, sales revenue.
Well, we are providing a service
Sales revenue.
by selling something.
Selling.
That's providing a service. It's a verb.
Okay.
All right, she posted up that. She posted to CGS 2,800. She posted it. Very good. She's got everything now. All right, entry 2 was that. Entry 11, we had another revenue. Okay, then finally, okie dokie. Then very briefly, you can push that board up. We're just going to make it small. It's just going to be 1 or 2 more minutes. What we're going to do is, okay, start to describe to you what an income statement looks like, which you need to know for chapter 5. The first part of an income statement is going to, leave that there, leave it right there, is going to be sales. Write down sales, net sales, right. Now, the second income, go to the middle of the board. Go right in the middle, go down a little even. Go down a little. Go down about 12 inches. Write down net sales.
Net sales.
Why at the top? Just go down a little. There you go. Net sales. Now, how much is net sales? Add those, how much is gross, how much is sales? Add those up,
1 second.
and then box them. Then, Miguel, you can box them. What is it, a 14?
15,600.
That's right. Wait a second. But you see, you have to subtract. That's gross sales. Now, 15,600 minus 145. Do that. Do it on a side paper. How much is that? Don't do it there.
15,455.
All right, so write down so net sales is 15,000.
455.
Okay, so now that's the first thing you learn. Now you see, now you learn something, which is that net sales is the sales minus the 2 contra accounts.
Okay.
Underneath that, write down how much is cost of goods sold. How much is cost of goods sold, Ange? 4,100 plus 5,120 plus 2,800 minus 30. You see cost of goods sold up there? In the income statement section? You see the, by the revenue? You see cost of goods sold? Up there?
Uh-huh.
How much is it?
Those are good, so expenses, right?
Your cost of goods sold expense. That's right, 4,100 plus 5,120
Plus 2,800.
plus 2,800
Minus
minus 30.
1190.
11,990? Is that what you got? Put that in parentheses, the 11,990. Underneath that, put a line, and then underneath that, underneath the CGS, write gross profit. So now subtract that, and that's our gross profit. That's the first thing that's found on an income statement. And then write a little 1 next to the gross profit to remind you that that's the first thing found on an income statement. Where's my girl? Laura.
Why do I have to put that cost of goods sold in parentheses?
Because on a financial statement, it means that subtraction. On a financial statement, parentheses means negative number.
Okay, but that is not a negative number.
Yes, it is. Net sales minus cost of goods sold equals gross profit. Let me prove that to you. Ready for this?
Okay.
I'm going to prove it to you. There's a formula. Revenues minus expenses equals net income, true? Or did
Yes.
you ever hear of that formula?
Uh-huh.
Well, so see, cost of goods sold is an expense, true?
Okay.
So it is a negative number. Again, revenues
Oh,
minus,
okay. Okay.
okay? And you did a great job.